Hey, welcome to the 40 Finance Channel investors. Today we're talking about AMD stock. Looking ahead here for the first half of 2022. AMD, like so many other chip stocks, has had an awesome 2+ year run, and demand for a lot of their stuff, particularly the GPUs, very similar to NVIDIA. GPUs are almost impossible to find. Now, on the commercial or enterprise side of the business, you got the Xilinx acquisition, which, at least according to rumors, is in the final stages, at least over in China, of getting the sign-off, which has got to be one of the harder sign-offs to get. And Xilinx was a profitable company in their own right, and we'll take a look at what their revenues and profits perhaps bring over into AMD stock. And perhaps the most obvious part of the bull case for AMD is just the markets that they play in are growing like wildfire. Whether it's gaming or laptops or database, these are all markets that are seeing exponential spending. And while AMD has its hands full with competitors like NVIDIA and even Intel as they start to turn things around, AMD's market share across the board is small enough, certainly compared to Intel, that you can easily make the argument that they have several percentage points of growth left to just represent their place in the competition. Now, on the bear side of things for AMD right now, it's all about competition, and most notably about margins, right? Because we could be getting into an era of price competition across all three of these big chip names. And if that happens, on the stock side for these chip names, they're all going to start to lose a little bit of margin, a little bit of profits, and that obviously will trickle down to the bottom line. And you stack that up against NVIDIA's and AMD's stock valuations right now, and it's tough to figure out how much upside is left in these stocks. So for this video, we're just going to do a stock analysis on AMD, try to figure out where this one should be versus where it could be through the first half of 2022. All right, let's take a look at AMD today, priced at 126. Right now, you got a forward PE of 42 and a PEG ratio of 1.22. Now, looking back on AMD's history prior to COVID, you had 23, 31, 49. I'm just going to say it trades in a range of 30 to 50 on the forward PE side. That's a pretty broad range, and that does make it a little bit more difficult to make a price projection because people have paid a lot of different valuations for AMD, and the numbers that we're looking at here was even before COVID. So from a multiple standpoint, this 42, it doesn't really strike me as super expensive. Certainly you could see a potential opportunity for that to dip into the 30s, which, to be honest, would be much more representative of the chip sector at the whole, which typically is going to get into the 20s and the teens on their forward PEs. All right, quick look at some financials. Company made about $15 billion over the last 12 months. Revenue per share of $12.25. And you had a diluted EPS in the last 12 months of $3.24. And looking at the balance sheet, hardly any debt, $702 million. You got total cash of $3.6 billion. So certainly no concerns in terms of, bankruptcy or going under or anything like that. Now, at some point, we'll have to factor in the Xilinx into our price projection, but to be super honest, that is probably a few years away. While approval for the acquisition is sitting on the desks of Chinese diplomats right now, keep in mind that it takes a solid year, 2, 3 to really integrate these operations. Now, on the bright side, like I said, Xilinx is a profitable company. It's sort of interesting from a Xilinx valuation standpoint here today on the forward PE, you have a 52. If you go back, and this is annual chart, if you go back into 19, 18, 17, You know, there's not a lot in the past history that suggests that this should be trading 2x of its typical forward PE, but we do know that that acquisition's coming up. And just looking at their financials, so bringing in $3.5 billion over the last 12 months. So let's stop here for a second. We just saw AMD about $15 billion over the last 12 months. So very roughly, you've got Xilinx potential to add, you know, plus 25-ish% revenue to AMD's top line once they are fully integrated. And it looks like, at least EBITDA line, you've got $1 billion in EBITDA. Let me look at AMD real quick. They had 3.4. So again, you're adding about 20 plus 25% or so, something like that. Can't really do earnings per share comparison because AMD has a lot more shares outstanding. As a matter of fact, Xilinx, 250 million shares outstanding, and AMD, 1.2 billion. So the per share part of the equation doesn't really work. Now, the one thing we can do is just some simple napkin math. You've got EBITDA of 1.03 billion. We know that AMD has 1.2 billion shares. So let's just make it super easy and say that, roughly speaking, Xilinx could add about $1 per share worth of earnings to AMD when they are fully brought together. And right now we're in 2022 and you're getting to the end of the approvals. So, you know, maybe that gets added, the $1 per share projection I'm throwing out here. Maybe that gets added by the end of 2023. It's really hard to tell at this time. All right, speaking of earnings, let's see how AMD has done versus analyst projections here in the recent past. And this is a quarterly view, and you've got a lot of beats, right? You've got a lot of beats right off the bat. And really where this lands is between 10 and 15%. That they beat by in each of the past 4 quarters. So we're going to keep that in mind when we do our calculation. Now let's look ahead to projections for 2022. They obviously have not reported 2021 yet, but they're looking at a $2.65 EPS, 100% EPS growth year over year if that were to occur. For our purposes, we're going to focus on the end of 2022 to get that forward PE. You're at 335 on consensus estimates right now. You can see that is still good growth, okay, plus 25%. That's still fantastic growth, certainly compared to the rest of the stock market. It is, however, slowing growth. This is a stock that was flying and couldn't do anything wrong, and they're still doing awesome things, but this is a relatively big drop down. So when you want to think about, you know, valuation multiples, would you pay more for a company that was growing triple digits on the bottom line versus 26% on the bottom line? Obviously, the valuation in this time period is going to be much higher. Now, in regards to this 335 number, as we mentioned in the screen before, I'm just going to go ahead and add plus 10% to that because AMD has consistently outperformed. We will get their guidance in February, I believe, is when their earnings call is. So I'm going to call December 2022's target at 370 for now. Let's take a look at sales here. This year, 16 billion if they hit that number, which they probably should. Next year, 19 billion, but once again, slowing growth. Still growing, not growing at the same pace that they were. So you had price to sales under 10 heading into the end of last year. If you do get to that 19 billion, your price to sales drops down to about 8. Again, if you were going to meet somebody who was trading chip stocks back in 2015 or 16, they'd still say that that's relatively high for the sector, but a lot of stuff has changed. And the fact of the matter is we've never been more reliant on chips, and they're just a bigger part of our everyday life Couple that with the fact that demand is outstripping supply right now. All right, before we get into my final price projection, I want to bring up an interesting idea if you're thinking about buying AMD, and this is from a SeekingAlpha author, Mr. Vashi, who's proposing sort of an arbitrage way to buy AMD shares. And this proposal involves buying Xilinx shares with the expectation that they're going to turn into AMD shares. And I would say 3 or 4 months ago, I'm not sure I would buy into this strategy just because I wouldn't be sure if it would pass regulators' approval. But now that China is oh so close to on board, there might be something here. By the way, quick call out if you're interested in learning more about SeekingAlpha's platform and saving a boatload of money on a premium subscription, check out the link in my description. It's my affiliate link. And through my special partnership, the link down below is an exclusive discount, and it pretty much makes joining SeekingAlpha a no-brainer in my opinion. All right, so what's the play here from Mr. Vashi? You can see merger arbitrage play. During the earnings call, this particular article is from November, so he's referring to the recent earnings call at that time. Lisa Su reiterated the expectation of deal closure, and as you may know, AMD agreed to buy Xilinx in an all-stock deal, and each Xilinx stock will convert to 1.7234 shares of AMD. Due to market inefficiencies or expectation of deal failure, which I think that's really where this was going, investors can buy AMD via Xilinx stock to avail of a massive discount. Here's how. And then he's got a couple comparisons. If you bought AMD, at 122, you'd pay $21,000. Comparatively, if you bought 100 Xilinx shares, you would get 172 AMD shares, and the price on that particular day when he wrote this, you would save 12%, it looks like. And as I'm looking at the ticker here for AMD right now, you got 127 as the price. So if we multiply 127, the current price, by 1.7, 4, it looks like, that's what equates to what you would receive in this arbitrage deal. You would receive $221 worth of stock if this happened right this second. And then on the flip side, Xilinx is trading for $191. So 220 minus 191, if all remain constant, it would be about a $30 savings, assuming you are willing to put your money down that the Xilinx merger happens. So that's how this blows up. Okay, so keep that in mind. I don't want to lead anyone astray. This blows up if the merger fails, and then you got overpriced Xilinx stocks on your hands. So just keep that in mind, but it is a way to do it, and you're certainly rewarded for taking that risk. All right, so final summary for me here. Bull case for AMD. I mean, the long-term success of this company, honestly, to me, it seems imminent. So if you're playing the long game, who really cares about the nickels and dimes as far as fair valuation today? If you're going to go in for 5 or 10 years, you probably don't need to worry about that. We talked about Xilinx, final approval. That's on the way. That's obviously a bull case. Small market share, should really be one word, but their small market share today gives them some easy incremental wins, and I think that goes back to long-term success. Finally, we talked about database, gaming, enterprise, laptops. These are all massively growing segments with insatiable demand, so you've got to like that for AMD. All right, on the bear side, we've got Intel and NVIDIA. You're going against some big dogs. You can downplay it all you want, but Intel is building big things. NVIDIA already has big things. It's really hard to imagine a full market dominance by any one of the players. So with that, when you've got 3 people competing across many of the same services, declining margin, right? You got to lower your prices. It's that close of a race. that you could have to lower prices, take less profit, etc., etc. You also have the problem of a very cyclical industry, rotational, however you want to say it. The buying cycles for all these components ebb and flow on a massive, massive scale. The tech cycles, you know, when is the next big proliferation of GPU technology and CPU technology? Every year they release new things, but when is the next big step up? Think of it like Apple iPhones. You know, some years it's just, you know, a little bit of updates, and then other ones it's 5G, it's new cameras, etc. You can expect some cycles to be duds, and that will lower the valuation of stocks like these. Also on the bear side, I mean, we're pretty much trading at full valuation right now. You're going to see that in a second. So the upside, I think, is limited in the short term, but obviously long term should be the focus. And then lastly, declining growth percentage after COVID boom. Listen, there's hundreds of companies that are facing this. Anytime you ring up triple digits, man, you can't comp that, right? It's going to be a negative comp in terms of your growth percentage. There's a lot of people who are going to face it, but it should be known that they are growing and projected to grow at a smaller pace than they had last year. And I don't think it's a surprise, but it stings a little bit when you see it in the reports. All right, so where am I landing? Price projection through the first half of 2022. I'm going to do EPS projection of $3.70. That's what the forward PE will focus on. That's plus 10% over consensus. Forward price to earnings, I'm putting it at 35. It's 39 today. The range has been 30 to 50. And it really just depends on how hot the news is. I think we'll see compression in PE ratios. So that's why I'm betting on 35. That gives you a price projection. It's really like 129.50. I'm going up 130. So you've got a little tiny bit of upside from 127. But in my opinion, you're looking for buying opportunities. If you're a new investor, you're looking for buying opportunities at 115 or below. Try to lock in more upside through the end of the year. However, if you buy and hold and don't look at anything for 10 years, then what's stopping you from just DCAing every single month? All right, guys, so that's my take on AMD heading into the first part of 2022. Let me know what you think in the comments. As always, share the video, give a like, all the things. We'll see you on the next one.